Hi there. Welcome to Trading Day. I'm Lindsay Biscaya. Let's get to some of the stories we're following in the BNN Bloomberg newsroom today. Lululemon founder Chip Wilson is pushing for a board shakeup while Lululemon searches for a new chief executive. Earlier this month, the company announced CEO Calvin McDonald will be stepping down come January. Wilson has nominated 3 candidates to Lululemon's board, including former Running Co. CEO Mark Maurer, former ESPN Chief Marketing Officer Laura Gentili, and former Activision CEO Eric Hirshberg. Silver slid 7% today after topping $80 an ounce for the first time ever in overnight trading. The precious metal is still higher by more than 155% year to date. Silver is viewed as a safe haven for investors who are wary of heightened geopolitical tensions and other risks, such as the ballooning U.S. deficit. And the United States is offering Ukraine security guarantees for a period of 15 years. That's part of a proposed peace plan, according to Ukrainian President Volodymyr Zelensky. Despite the offer, Zelensky has said he would prefer an American commitment of up to 50 years to deter Russia from further attempts to seize its land by force. Taking a look at the markets today, the TSX was cooling off slightly after a couple of record-breaking days. You can see this is over the last year. It's been a year as we end out 2025. If we take a look at the U.S. markets for the last couple of days of the year, most of these also trending down today. We're seeing some of the bigger stocks like Nvidia, Tesla falling. That's bringing the S&P 500, the Dow Jones, and the Nasdaq down today. The U.S. dollar also dipped to its lowest in 3 months, turning investors to precious metals like silver and gold. Meanwhile, global stock markets are up 22% this year. Here to break down if market dominance may be shifting from the U.S. to across the Pacific is Thomas Caldwell, founder and chairman at Caldwell Securities. It's good to have you today, sir. Thanks for taking the time.
Lindsay. Nice to be here.
Definitely going to talk about silver and gold in a moment. But first, just on that note, do you think market dominance is shifting away from the U.S.?
There's so many things going on. I don't know that market dominance is shifting away. You've got a couple of things going. There's some concerns about the U.S. dollar. It's been actually quite weak through this year. That's policy, by the way, for the U.S. There's concerns about the U.S. dollar being weaponized. So people are thinking in terms of alternatives. Part of the alternatives, and again, inflation, that's another concern. People are going for stuff. Equities are stuff. So I still think the U.S. market, which is reflecting a fairly strong economy, is still going to stay fairly buoyant. But people are looking for alternatives away from the U.S. or U.S.-centric type of investments. And, for example, world banks are buying metals, that type of thing.
Mm-hmm. Yeah, okay, so when we're talking about people looking for alternatives, obviously silver and gold saw some pretty incredible runs this year. Silver in particular, not so much today, but given what we saw near the end of this year, is that the reason for seeing such a run-up with silver and gold?
Well, I think the gold started with China, the central bank in China, saying, we hold all these U.S. bonds and we have U.S. denominated things. And frankly, U.S. isn't anybody's friend right now. We'd like to have more gold. So they've been selling U.S. treasuries and buying gold. They've been huge buyers of gold. And that's been the case literally around the world. So that's really pushed the dollar up. People have been looking for alternatives. Even crypto was an alternative for a while, but crypto is not a currency. It's like a stock with no fundamentals. So they move from crypto, gold, silver. Equities are part of that too. I mean, because if you look at the U.S. economy, no matter what Trump's doing internationally, the U.S. economy is doing well. So you want to get inside that economy. So that's been holding up. But people are looking for alternatives to money. Inflation is a killer, and it's big time. And you mentioned earlier the U.S. debt. That's looming. That's like a tsunami wave. Nobody knows quite when that's going to break, but that's a big issue as well.
Yeah. Do you think that's going to be a big issue as we head into 2026, obviously? Is that U.S. debt that's kind of accumulating there?
It's getting more airtime, and the more airtime it gets, the more people become conscious and try to move around it. Whether that tsunami wave is going to crash on us in 2026 or the year after or some point, but at some point something's happening. There's only 3 ways governments deal with debt. They either pay them down, grow the economy to diminish it in size, or inflate it out of existence. Guess what they do most of the time? It's inflation, despite this nonsense of 2%. They're inflating it out of existence or diminishing it through inflation.
I just want to go back to silver for a moment, because I know we've been talking about silver and gold quite a bit, even though we're seeing a little bit of a pullback today. But I want to touch on something that Elon Musk recently said about the price of silver. He was saying on X, this is not good. Silver's needed in many industrial processes. There's a quote from Elon Musk there. What do you think he means by this? Like, where's his concerns here coming from?
Well, I think with the pullback, by the way, at the end of the year, don't count that because it's so thinned out right now. There's very few people, both in New York and Toronto and anywhere else. Everybody's on more or less mental holidays. So that's not indicative. But I think it's part of the rotation out of money into stuff. Musk is right. Silver does have industrial uses, unlike gold. But it's always been sort of the laggard. But it's part of this move away from currency. How can I protect my purchasing power? Typically, when inflation is by owning stuff. Equities are stuff. That's a real thing. Real estate, it's that stuff. Metals as well, and particularly banks trying to flee the U.S. dollar, because that's the second influence you have, where if I have a bunch of money and tied up in U.S. dollars, what happens if I live in Venezuela, for example? All of a sudden, I could have my money impounded like the Iranian freeze, which in the Middle East, people still remember that. So it's part of it is fleeing out of the U.S. dollar to some degree. But there is, as Musk says, there is industrial use for silver, not so much gold.
Okay, got it. When you're talking about the U.S. dollar and a lot of people having concerns over the U.S. dollar in the new year, there's also expectations that the Fed will continue to cut rates in the new year at a time when a lot of other countries might be kind of done with that in 2026. Is that a concern that you see it moving forward?
Well, it's interesting. Everybody talks about the conditions of the Fed reducing interest rates. There are no conditions. The conditions are not there for reduced interest rates. The only condition is that Trump wants it, and the Fed is losing its independence. That's a scary thing as well. So he wants rates lower. We've seen what happened to the current Fed chairman when he didn't do it. He was called a buffoon, an idiot, late, and every kind of insult you can imagine. So central banks, they like to think they're a royal priesthood away from this. They're not. They're very political. So they're going to see interest rates decline. In Canada, we kept them the same. But remember, for interest rates to have any impact, people want to borrow money. In Canada, it's different. There's not the same confidence in Canada, despite all the rhetoric. So it's like pushing on a string when you cut interest rates, think it's going to get the economy going. The only way you're going to get the economy going in Canada is cutting taxes. But nobody seems to want to talk about that yet.
Not yet, so, maybe. Maybe next year. Just before I let you go, then where else do you think investors should maybe be looking at come the new year? What about emerging markets overseas?
Well, it's a little bit, this is politically incorrect. It's like a reverse beauty contest. What's the least bad kind of thing? And frankly, America's still the least bad. It's an economy that's booming. It's innovative. And yeah, they're beating up on everybody in the world, but you want to still be in that economy, as far as I'm concerned. I have some few lessons in China as well, but I tend to dabble my toes there kind of because that's a monster economy and it's going to grow and they'll come back in favor depending on what mood Mr. Trump is in on a given day. So as far as I'm concerned, the U.S. market is still a place I want to be in. Canadian market, this can be an amazing place if we get it even halfway right, but I want to see that in action as opposed to rhetoric. So that could be an interesting one coming. But I'm a little bit wary of both Europe and other places other than that. I would stay within the North American psyche with a skew toward the U.S.
Okay, lots to watch for in the new year. It's good to have you today. Thanks so much for taking the time. Appreciate it.
Thank you so much, Lindsay. All the best. Happy New Year.
You too. Happy New Year. That was Thomas Caldwell, founder and chairman at Caldwell Securities. Coming up after the break, we will look back on the threats and taunts over tariffs that took over 2025 and also triggered a trade war. Stay with us. Well, if there is one word to define 2025, it would be tariffs. CTV's Mike LeCouture has this report on the threats and taunts over tariffs that took over 2025 and triggered a trade war.
We don't need their cars, and we don't need the other products. We don't need their milk.
It was the opening salvo in the year-long trade war. Threatening to take Canada by economic force, President Donald Trump floated punishing tariffs on his first day in office.
We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people. Canada's a very bad abuser also. Vast numbers of people to come in and fentanyl to come in.
They applied to all goods not covered by CUSMA. The day they took effect, Canada hit back.
Tonight, I am announcing Canada will be responding to the U.S. trade action with 25% tariffs against $155 billion worth of American goods.
Provinces also joined in the fight, removing American alcohol from liquor stores and threatening to cut off energy exports to the U.S.
The next Prime Minister of Canada, Mark Carney.
After campaigning on going elbows up in the face of Trump's tariffs, Prime Minister Mark Carney went to D.C. a week after the election, looking to reset the relationship. In that Oval Office meeting, the Prime Minister did push back on talk of Canada becoming the 51st state.
As you know from real estate, there are some places that are never for sale. And having met with the owners of Canada over the course of the campaign last several months, it's not for sale, won't be for sale.
The two met again at the G7 in Kananaskis, where they reportedly set a 30-day timeline to get a deal done. But the pathway remained the problem.
I've always been a tariff. It's simple, it's easy, it's precise, and it just goes very quickly. And I think Mark has a more complex idea, but also very good.
Over the summer, Canada responded to Trump's complaint about the digital services tax by removing it. While talks continued, so did the threats and uncertainty for businesses.
You guys are about as dumb as a bag of hammers for doing this.
And when the company that makes Crown Royal whiskey moved work at a bottling plant from Ontario to the U.S., Premier Ford didn't hold back.
So this is what I think about Crown Royal. That's what they could do. And I think everyone else should do the same thing.
With trade talks slowing, another Oval Office meeting took place in October, where Trump spoke glowingly of Carney and Canada.
I would think he's more popular now. He's a good man, he does a great job, and he's a tough negotiator.
So then what's holding things up? If he's a great man and you want to do a deal with Canada, why aren't you?
Because I want to be a great man too.
But that laughter would fade after Ontario released an anti-tariff ad in the U.S., using a speech by former President Ronald Reagan. Trump called it a hostile act, while his ambassador to Canada described it as election interference.
A foreign government running political ads in the United States during election season is unprecedented.
Carney would apologize to Trump at the APEC summit, and weeks later, the Prime Minister downplayed how much or little he communicates with Trump.
Who cares? I mean, it's a detail. It's a detail. I spoke to him. I'll speak to him again when it matters.
Those words got this response from Conservative leader Pierre Poilievre.
All of us on this side of the House care about the communities that are being emptied out in our forestry, the steel workers in Hamilton who don't have jobs to pay their mortgages. We care.
Carney, Trump, and Sheinbaum had a 45-minute meeting after the FIFA World Cup draw. In the same week that Trump mused about letting CUSMA expire, he also agreed to keep working on the trade agreement.
Canada makes a lot of things that we don't need because we make them also. But we'll work it out.
The following week, Canada's envoy to D.C. announced she would be stepping down in the new year, saying it was time.
Our discussions with the United States with the CUSMA review, the Canada-U.S.-Mexico Trade Agreement review, that's going to start up in the new year. And I think it's important that we have someone in place that is going to be here through the conclusion of those discussions.
The formal joint review of CUSMA is scheduled for July 1st, 2026, setting up what could be another year of turmoil with our largest trading partner. Mike Lecouteur, CTV News, Ottawa.
Coming up, we've got a year-end look at Canada's infrastructure spending and what's to come in 2026. More on that after the break. Welcome back. A high-stakes meeting that could potentially lead to the end of the war between Russia and Ukraine took place in Florida yesterday between the Ukraine and U.S. presidents. But as Kamal Karamali tells us, there's some sticking points that could slow down the process to a peace deal.
This is the meeting that could spell the beginning of the end of the nearly 4-year war between Russia and Ukraine.
We covered, somebody would say 95%, I don't know what percent, but we have made a lot of progress on ending that
war.
Ukrainian President Volodymyr Zelensky in Florida to try and get U.S. President Donald Trump to sign off on his 20-point peace plan.
Of course, if we will go further, and I hope that really we will have decisions in January.
Those steps involve Russia being a willing participant, which is still in question. One of the key sticking points include territory in eastern Ukraine. Ukraine has said it is willing to withdraw troops if Russia does the same and allow the region to become a demilitarized zone.
That is beneficial both to Ukraine and not to Russia because they don't want to move off of the front lines at all. They want to keep the line right where it is.
Ukraine is also looking for security guarantees, support from other nations should Russia attack again.
Those security guarantees will be provided not only by European and NATO nations, but in the 20-point plan, it specifically spells out the United States. And President Trump has also indicated that the United States is prepared to do that.
Part of the reason why rounding up support from Canada and European leaders was so important before meeting Trump. Although time is of the essence for Ukraine, Trump had this to say before the meeting.
I don't have deadlines. You know what my deadline is? Getting the war ended.
Zelensky claiming Russia doesn't want to negotiate under peaceful terms, pointing to the attack on Kiev earlier this weekend, but Trump maintaining both sides want a peaceful resolution. Kamal Karamali, CTV News, Toronto.
Canada's infrastructure has turned from an abstract policy into one of our biggest pressure points. And joining us now to discuss what's worked and what's to come is Ted Betts, Head of Infrastructure and Construction at Gowling WLG. It's good to have you today. Thanks for joining us, sir.
Thank you. Happy New Year.
Yeah, Happy New Year to you as well. Let's start by looking back on what happened in Canada in 2025 and what we're looking at for Canada's infrastructure now, given the major projects office that was introduced, the budget for 2025 in November, a lot of new spending. Are you feeling optimistic about Canada's infrastructure kind of landscape heading into the new year?
The infrastructure landscape has definitely shifted, and it's looking very strong and positive. There's been a real focus on not just infrastructure for its own sake, but as a nation-building project funded primarily by the federal government, but working with the provinces to develop transit corridors, pipelines, all sorts of things that will ideally build the nation stronger and more economically sound.
When we're looking at the budget and that, $50 billion in spending that was announced this year, was there anything in particular that surprised you that got kind of moved up on the priority list? I know clean energy has been talked about quite a bit by the Prime Minister.
It's an interesting mix. It's a really broad mix of infrastructure projects that are being funded or facilitated. They're not just funding, they're also committed to fast tracking a lot of the projects that are already in existence and underway and planned in the planning stages. So one of the interesting things is the breadth of the projects. We've moved from a lot of clean energy projects like LNG and small modular reactors. Those were kind of already in the works and kind of expected. But we're also expanding the definition of what we mean by nation-building infrastructure. Housing is there. There's a lot of funding and project planning for mining and critical minerals. So it's an interesting mix. It's across the country, and we'll see how it develops over the next 10 years.
Given that it is such, as you say, an interesting mix, do you think that we'll see anything more kind of prioritized? Do you think something will take? Are you feeling cynical about anything, I guess I should ask, in terms of maybe taking a back seat when it comes to priority?
Well, there's always a choice when you have limited funds with the government. And I think the provinces are working with the government to set those priorities. Clearly, energy transmission through pipelines and transmission lines and the generation of power itself is a critical part to any kind of infrastructure build. We need the power to build things. We need the power to operate our businesses. And so that's clearly a critical plan. I don't know that, I know there's some concerns with municipalities that maybe transit has dropped down a little bit in the priority, but I think you've got a first round and then a second round of announcements of what are those priority major projects that the federal government is focused on. Most of those are more on the municipal and provincial level, and so we'll see how the funding goes. I think that all the provinces across the country as well are focused on those kind of critical infrastructure projects and looking for some support from the federal government for them.
And of course, we've got the Major Projects Office, which was introduced, the Build Canada Act, all kind of designed to help Canada rely less on the U.S. Do you think that that's going to be the case in the new year? Do you think that will actually work out that way?
It's really quite astonishing how quickly we've pivoted from focus on U.S. Trade and U.S. commerce and looking at ways we can take care of ourselves, both through removing trade barriers and getting out of our own way, but also building that infrastructure that will allow us to link up east to west and west to east and north, and rather than south. And so I think there's a lot of optimism, I think, in the infrastructure space. A lot of work ahead of us. Sometimes we worry that by going fast, you're going to result in going slow instead of going slow now to work faster later. But part of the effort is really calibrated to be a facilitator, not just a funder, not just picking winners and picking projects to move forward, but actually setting up an office that will facilitate and expedite, simplify, and remove a lot of the barriers. As I said, getting away from getting in front of getting in our own way. And so hopefully that will succeed, and we'll start to see the success moving forward in 2026. And we've already seen some funding that has moved projects along.
Do you think that this office is actually going to do that, as you say, like kind of fast tracking projects? Because I think it's important to remember too, fast tracking makes it sound like these projects could be built in 1 or 2 years, but it still takes quite a while to see these projects kind of move through.
Yeah, we'll see how that plays out. I do think, there's a reason historically why there are so many levels of approvals and at different stages of the project. A design and details of a project and the site condition studies and reports need to be developed at a certain pace and a certain stage. The frustration people who are building things have is that they have multiple repeats of the same thing. And so hopefully there's an effort, and we're already seeing some signs of it, that we're going to remove the duplication at least. I think you still can't get away from multiple stages of touching base with your local community, touching base with Indigenous groups. As the project develops, it's doing different things to the land, to the environment, and you have to assess that at each different stage. But hopefully we're going to remove a lot of the red tape, a lot of the duplication, and maybe get some consistent facilitated approaches. Sort of one-stop shop would make things a lot easier, and that's gonna reduce the time from the start of a project to the end. And time is money, and money stays in our pockets as taxpayers if we can get those projects done quicker.
Just when it comes to Canada's infrastructure in particular, there's of course spending that we saw on the private side as well. Was there anything in particular that excited you in terms of private capital spending, particularly for AI data centers, something we saw a lot of this year, at least a lot of talk?
Yeah, it's an interesting twist as well. You not only have the federal government expanding what it considers as key and major project infrastructure like housing and mining, which traditionally hasn't been, but you're also seeing private power generation that's needed for the data centers. In the U.S. especially, you're seeing a close look at nuclear power. Here, you're looking at LNG and other sources of private sector power. You've got an expansion of battery and power storage. So all this kind of infrastructure adjacent or infrastructure related in the private sector that's being funded by the private sector is going to really change the nature of big projects in the country.
Okay, we'll have to leave it there. Ted Betts, Head of Infrastructure and Construction at Gowling WLG. Appreciate you taking the time today. Thanks so much for joining us, and we'll talk to you in the new year.
Thank you. Happy New Year.
Happy New Year to you as well. Well, 2025 had its ups and downs, trade tensions early on, steady growth later. What will 2026 bring? Stay with us. We'll look at that right after the break. SoftBank Group has agreed to acquire Digital Bridge Group, a U.S.-listed investment firm focused on digital infrastructure, including data centers. The Japanese conglomerate will pay $16 per share in cash for Digital Bridge. The acquisition is part of SoftBank's push to invest in the digital infrastructure fueling the artificial intelligence boom. Shares of NVIDIA are down today after the AI chip designer purchased Intel shares worth $5 billion U.S. The deal is seen as a major financial lifeline for the chip maker after years of missteps and capital-intensive production capacity expansions drained its finances. And Lululemon founder Chip Wilson is pushing for a board shakeup while Lululemon searches for a new chief executive. Earlier this month, the company announced CEO Calvin McDonald would be stepping down come January. Wilson has nominated 3 candidates to Lululemon's board, including former On Running's co-CEO Mark Maurer, former ESPN chief marketing officer Laura Gentili, and former Activision CEO Eric Hirschberg. Taking a look at the markets today, we'll start with the TSX, which has cooled slightly from some records high. You can see in the last year just how much it went up. It's down a little bit today. Same with the U.S. markets. If we take a look south of the border, the S&P 500 down 0.4%, Dow Jones down 0.4% as well, NASDAQ down 0.6%. Of course, we're seeing some of the big stocks today, NVIDIA, Tesla falling, and that could be part of the reason for what we're seeing here. Now, according to our next guest, 2025 told 2 stories. The first half was all about trade wars and market reaction. The second half saw an investing drive in AI, keeping growth going. Overall, the economy stayed steady. So what does 2026 look like? We have more now with Shelley Kaushik, economist at BMO Capital Markets. It's good to have you. Thanks for taking the time. Appreciate it.
Thanks for having me, Lindsay.
Let's talk a little bit before we look ahead to 2026. We're in the last couple of days here of 2025. So can you elaborate on those kind of 2 stories we saw this year that divided 2025?
Yeah, and I think that's very much the case on a global perspective. We certainly saw trade dominating the headlines, dominating markets, certainly in the first half of this year. And then kind of as things cooled down a little bit from that, peak of uncertainty, if you think back to the spring of 2025, we started to really see the AI trade picking up steam and certainly gaining momentum in terms of, again, hitting those headlines, hitting the market sentiment, and really driving the story here in the second half. Now, for Canada, I would say I think trade is still very much kind of the top news story of the year because, yes, global trade uncertainty did take a step back in the second half of 2025. But I do think we did see a number of, trade irritants or questions and other uncertainties pop up between just the U.S.-Canada trade relationship to end the year. And so I think trade is still very much the main driver here in Canada, although I certainly don't want to discount the value of AI. But I think for Canada, it's certainly a story of trade for this year.
And do you think into 2026 as well? Like we keep hearing that, Canada fared better against the trade war than previously or initially expected, which makes it sound like we're out of the woods. But I mean, we've got that renegotiation of the free trade coming up in the new year. So is that something you're still going to be watching for as we start out 2026?
Yeah, certainly. I would still characterize us and the Canadian economy specifically as kind of being past the peak of uncertainty. I would certainly say that as of right now, it does look like that peak uncertainty, that peak hit is behind us, likely around the second quarter of 2025. So we're not looking to see that big of an impact from trade uncertainty into 2026. But as you mentioned, it'll still very much be in the news. It will still very much be top of mind for the economy, especially with these formal talks reportedly starting mid-January. That's certainly a little bit earlier than we would have expected. And I think that is a good thing in the sense that it could bring some more certainty. But as we all know, I mean, these headlines can change very quickly. These developments can change very quickly. And so I think at the end of the day, until we get some sort of certainty, some sort of stability in the U.S.-Canada trade relationship, that trade tensions, those trade threats will still very much be top of mind for Canadians.
Yes, I think if there's anything we learned in 2025, it's that things can change very quickly, particularly when it comes to trade. I want to talk about commodities because we saw some interesting runs this year when it comes to gold and silver. We saw the price of oil drop. Was there anything that surprised you throughout this year when it comes to commodities?
Yeah, certainly the uptick in gold is certainly one of the big surprises, I would say, even in real value terms, just the price skyrocketing as it did through this year. And I will say that is something that helped the Canadian economy too. As an exporter of gold, the trade deficit was, and to some degree the trade balance overall was helped by the fact that Canada does export gold. And so those prices did help on that side and help the economy from that perspective as well. Probably the more surprising thing and kind of goes under the radar is some precious metals, like you mentioned, silver, platinum, actually outpaced gold. And so of course that has to do with, the utility of those metals beyond just the jewelry and the asset value that gold might have. But I think that's certainly one of the surprises for me.
When it comes to the housing market in Canada, a lot of people were kind of worried about that. We've seen a lot of potential buyers sitting on the sidelines still, not a lot of homes selling, particularly in the end of the year. Is that something you expect to see in 2026, or what do you think will happen there?
Yeah, the housing market's very interesting because it very much depends on where you are in the country. Certainly, it is, nationally speaking, kind of a stable market, a little bit balanced, if you will, between buyers and sellers. But then if you look in specific segments and certainly specific regions, particularly those that are still struggling with the affordability calculations, like in some parts of BC, like in some parts of Southern Ontario, it's still very much a buyer's market. It's still very soft, despite the fact that the Bank of Canada has cut interest rates so much, including through this year. And yeah, I do expect that to continue into 2026. The fact is that affordability does remain a challenge, even though mortgage rates have come down through this year, even though there is quite a bit of monetary easing coming through the pipeline and actually affecting consumers and affecting the rest of the economy. I do think there's still a little bit of tension there with those affordability challenges, especially in those regions. The rest of the country, I mean, it really does depend. Like I said, nationally speaking, we're kind of in a balanced market. So we've still got some areas like Quebec, for example, Quebec City, one of the tightest markets in the country. And really that affordability picture, that relatively affordable home prices there are really helping keep the market kind of in seller's territory. We do expect that to come off a little bit, kind of that regional disparity to narrow a little bit. But again, that affordability picture is really going to be still driving the story in 2026.
And also, when we look back in 2025, we saw some rate cuts here in Canada with that kind of steadying out by the end of the year when it comes to the Bank of Canada. But we could see maybe some countries hiking rates in 2026. Like, what do you think we'll see kind of across the board, including in Canada and the U.S.? There's a lot of rate cuts expected there to start out the year, at least.
Yeah, I think a number of advanced economies have already seen their central banks cutting, and in some cases quite aggressively. Now they're starting to see, inflation maybe pick up or remain quite sticky. They're starting to see maybe their economies start to stabilize, if not recover. And so we are starting to see a number of central banks thinking about hiking potentially in 2026. For our part, when it comes to Canada, we do think that the Bank of Canada is going to remain on hold for this year. They have already cut. Of course, we do have overnight rates at 2.25%. There is some potential impetus to cut further next year, as there is to potentially hike. So I wouldn't necessarily take those two options off the table just yet. But again, we do expect them to stay on hold. As you mentioned, the Federal Reserve does have a little bit more of a bias towards cutting, all things considered, especially compared to Canada and potentially other central bank peers. We do also, I will just point out, in about the middle of 2026, we are expecting a more dovish leading Federal Reserve with a new Fed chair to be announced by and appointed by President Trump, who, of course, does want to see a little bit more dovishness out of the Fed. So with Fed Chair Powell being replaced as the next Fed chair in the middle of the year, we are expecting a little bit more of a dovish tilt, so certainly more cuts, but also a little bit more dovish risk in the United States.
It'll be interesting to see what happens. Okay, Shelley Kaushik, economist at BMO Capital Markets. Really appreciate your time today. Thanks so much for joining us, and Happy New Year.
Thanks, you too.
Coming up, hot picks in tech, including in law enforcement technology solutions. We'll have more on that right after the break. Welcome back. It's time now for Hot Picks. Earlier, we zeroed in on 3 plays in tech with Andrew Sherman, analyst at TD Cowen, and we kicked things off with his thoughts on Tyler Technologies.
Tyler, we just initiated a couple weeks ago, the buy rating, 650 price target. This is a 20 billion market cap software vendor focused on the state and local government markets. They're the only public player that does that. They're the leader. They sell all sorts of mission critical software like ERP systems, tax, public safety, education. These are all mission critical functions of the government. We think they have a durable cloud story, including their cloud migration story as they convert a lot of their on-premise customers to cloud over the next several years. They already earn very high margins, and we see these margins expanding. We think their AI positioning is great as they have deep customer domain data and domain expertise that they can use to automate a lot of manual functions that exist in these agencies. And the stock has pulled back. It's only about 35 times PE. This used to trade at 50 times earlier this year. And we think we can see multiple expansion into next year.
Now, did you say it's the only supplier for state and federal? Did I hear that correctly?
The only public scale player. Yeah, it's a highly fragmented market. There's a lot of private companies that are smaller that do this, but they're really the leader, and they've been doing this since 1998.
And any competition on the horizon, or are they just always? You're talking about how they're dealing with AI and integrating AI. It feels like they're always on the cutting edge.
Yeah, they compete with various companies depending on which product you're talking about. In ERP, they compete with some of the horizontal players like Oracle and SAP, but they don't see them very much in public safety. They compete with Motorola and Axon, and then there's a bunch of point solutions that they compete with in their other offerings as well. But I really think they have a great position because they're the only one that can offer a full suite of products to the public agency, and you can buy everything from Tyler, essentially.
And the governments like one-stop shopping, don't they?
Exactly.
All right, you mentioned Axon. It's also one of the ones you're liking right now. What about it?
Yeah, thanks. Axon's our best idea for 2026. We had that note out in November. This is a fundamentally very strong business. They have high barriers to entry. It's a fully connected hardware software ecosystem. We like to call it the Apple of public safety. They sell tasers, body cameras, software, drones, other cameras. And they have a great AI product now that's their fastest selling product in history. And a lot of that is led by an automated report writing software that is driven through the body camera. It also does real-time translation through the body camera in over 50 languages, which is a game-changing technology. So the stock was one of the highest flyers through the first half of this year. It's pulled back 30% the last 6 months, which we see as an overreaction to the Q3 print. We think this is a very good entry point at 10, 11 times sales. We see a lot of durable growth drivers into the new year, strong momentum in both new markets, including international, which is on fire, enterprise, and then selling new products to its existing customer base. Those new products are AI, drones, and Axon 911, which they just made a couple acquisitions to create that. So I think they have a long runway of durable growth. This company has grown 30% plus for quite some time now, and they're now about $3 billion revenue scale, which is some significant size.
What were some of the concerns that people had with the Q3 print?
The revenue beat and raise was smaller than they had normally been doing. And the bookings growth was a little bit lower, but a lot of that it comes in Q4, and revenue is a lagging indicator. So management on the call was extremely bullish about Q4 bookings and into next year and beyond bookings growth. So I believe in management's track record. I think they've done a phenomenal job running this business. So I think the stock will get back on track with a strong Q4 and guide in February.
All right, let's get the last one in, Titan.
Yeah, Service Titan, the Titan of the trades, as I like to call it. This is another one of our top picks. They're the software operating system for trades businesses. So think HVAC, plumbing, electrical, garage doors, roofing, many more. They're growing mid-20s. They've beaten and raised in their 4 public quarters. They really dominate their market, which is a very attractive one. It's very durable, recession-proof, or recession-resistant. It's a very large TAM with still low software penetration. Many of these businesses still don't use software at all. There's no AI risk. It's a great founder-led management team and an attractive valuation at about 8 times EV to sales. They just had a great Q3 in early December where they debunked some HVAC industry concerns. And we think our 16% growth estimate for next year is conservative and see good upside potential ahead.
That was Andrew Sherman, analyst at TD Cowen. Still ahead, today's market movers are coming up next with Bloomberg's Natalia Kinichevich. We'll have more on that right after the break. Welcome back. We're going to go through some of the top stories we're following today. And for more with that, we're joined by Bloomberg's Natalia Kinichevich. Natalia, it's good to see you. So let's start with Digital Bridge. This is a big story coming out today with SoftBank buying Digital Bridge for billions of dollars. What's going on there?
Exactly. So we see that shares of Digital Bridge jumped today, of course, on news that SoftBank agreed to acquire this company for $4 billion, including debt. This deal represents a 15% premium to Digital Bridge's closing share price on December 26. So we know that SoftBank will pay $16 per share in cash. And this acquisition is just a big, in terms of big picture, is just another push for SoftBanks to invest in digital infrastructure here as demand for power is growing amid the AI boom. And Digital Bridge is one of the biggest investment companies that it is focused on digital infrastructure. It has about $108 billion of assets under management. This is according to the latest data we saw for the end of September. So it's a pretty significant player, and it could be a really good asset for SoftBank.
Okay, we're also following Lululemon today. More turmoil within the company. Founder Chip Wilson is launching a proxy fight for board changes. What can you tell us about that?
Exactly. So we know that Wilson, who is the largest, one of the largest shareholders, he nominated 3 director candidates for election for the end of for the 2026 annual meeting. They include former On Holding Co-CEO, former ESPN Chief Marketing Officer, and former Activision CEO. So Lululemon, of course, said earlier this month that Calvin McDonald will step down as CEO at the end of January. And then now the company is, of course, searching for his successor. Well, we also know that activist investor Elliott Investment Management built a stake at around $1 billion in the company, and is also working with retail executive Jay Nielsen as a potential replacement. And to take a step back, the company, of course, is struggling a little bit because the forecast for sales growth is not as optimistic. Sales are expected to slow down amid some kind of concerns over purchasing power here in the United States, and of course, rising competition from companies including ALO.
And just very quickly in our last minute, Novo Nordisk stock down today despite some FDA approval of its obesity pill recently. What's going on there?
Yeah, so we know that Novo Nordisk cut prices for its treatments in China, in some provinces, by about a half. And of course, it comes when the patent for the active ingredient for Wegovy and Ozempic is expected to expire in China in March. And that could also increase competition from local companies that could introduce cheaper versions of the same drug.
Okay, that's all the time we have, Natalia. Thanks so much. Good to see you as always. And of course, this wraps up this edition of Trading Day Today. Thanks for watching.